So now we have last week because we had that first full week of the year. So we can start by looking back on that and just doing more of a recap review, more or less walking through each day and what we were looking at. Trade that I took on, I believe that was Wednesday. And then any questions along the way, we can cover those, and then we'll have a plan for tomorrow based on what price has done so far on Monday. We'll talk about that towards the end and then what we have on the economic calendar. But I'm going to pull up what we had last week because it was a pretty straightforward NFP week with not much else to really note on the economic calendar, because the big thing for us is going to be high impact events, meaning really the one that's going to take my attention is 8:30 on Friday. This is NFP here. That's the only high impact news event of the week, and I want to know it's there because I am not going to trade intraday before, and I am not going to hold an open trade through this event here because of the extent of the volatility and the consistency that it hits the market in. All these other ones here, outside of 8:15 on Wednesday, this is one I completely discount. I really don't even care that it's here. I'm basically crossing this one out. Monday 10 a.m., Wednesday 10 a.m., Thursday 8:30, and Friday 10 a.m. These are all low impact news events, so no specific rules around them, meaning I won't avoid the market because they're existing in any sense, but it's good to know that they're there just for the sake of, at this time, some extent of volatility will hit the market, and you can use that to your advantage if you need more context to pair with an entry, whatever it may be. But it's not really changing rules in the sense that I couldn't hold a trade through this type of event or trade before it. So these are good to be aware of, but somewhat on the back of my mind. The main one is Friday NFP, and that's the only one that truly is going to matter the most. And when we were looking at price on Monday, the day closed a bit different than what we saw initially. So we were basically looking at this framework that could have played out to either side. It could have been trading away from this divergence that we had off the daily because we had, looking left, a relevant swing that was a ran out previously. We were trading off of that, and we also formed a divergence here on the daily and closed relatively weak on that previous week closure. So there could have been potential that on Monday you had this framework where if it were to come in, Monday basically puts in a high below that invalidation point and drops down. That could have been a signal to be trading the continuation away from Monday's range, but clearly that was not the case. We invalidated that quickly and we traded to the upside, and really this is confirming the opposing direction, which we're using Monday as a level of confirmation. This is our relevant swing in the other direction. We closed back into the range, and now Monday traded away. Ideally, you would have had a slightly stronger closure on Monday's daily candle, slightly closing off of the highs, leaves NQ with not the best positioning, but on ES, you could assume the continuation, but it's with a little bit, not real caution, but in the next day, I'm not going to be aggressively trying to position longs because that closures, it's not my favorite thing ever. I would have liked it to close towards the highs to get that full idea, just to trade the continuation. But we can go into that next day looking at the daily profile to see if we're going to trade away from that Monday low. So Monday puts in a low, Tuesday continuation. And on the daily profile, that development on Tuesday, we did have this London reversal forming, which is a good sign. And if we were to zoom out again, the close off the highs makes this a little bit more difficult, but it's right on that invalidation point. You're getting that reaction. So if it's putting in a low there, it basically has to occur at that point, and that's where we're getting that reaction. 18 candle, not establishing a low. London taking out the 18 candle low, trading back up into the range, leaving behind that larger wick at the invalidation point, and you could assume that New York session could continue because that's what the daily profile development is showing. But when we go down to the lower time frames, it's not the best look at it, only because we got this really aggressive run down in the London session. The only reason this isn't the best is because when you're looking for your initial reversal confirmation, we see low of day potential. We keep drawing our eyes left to the opposing candles. You're not going to get a closure until quite high up, and even if you go like higher time frame to refine this, it's just going to be pushed up even higher. So where you'd want to be positioned into that expansion, you don't really get a closure until it's kind of already made the move. So this is not the best. So you're kind of forced into using the open for context. And one thing we can do in this case, because we may not want to wait for that closure, is I can use the wick of this candle here, measure that out, and say I would want to see the 8 o'clock candle. When we go back down to the lower time frames, it should be respecting that here, because if it goes deeper, then we're going to be creating failure swings to that intraday low. So not respecting this is going to create failure swings. So we couldn't trade that to the upside anyways. The main thing here is we have that. We're waiting for the open, and 9:30 in itself did confirm that move, showing it wants to trade higher. So I did not trade this day because I did not feel the conviction of executing internally here. I felt you get a better perspective if you're seeing a breakout of this previous day high to reach up into the relevant swing above, just because I didn't like the way that this was developing off the low. So really the only way you could get on side with this here, and I think some people might have, is likely this 5 minute right at the open. When we wait for open for that context, it's pushing price higher. You have your first opposing candle closing back through, run on a short-term low. That could have been your entry, waiting for that open confluence. Anything past that, there's really nothing there. This is just that expansion move up into the high. And beyond that, I wouldn't be trading anything this late into the day. So this is really your only opportunity. And the difference is more so if you had the conviction at this time to position into that high. And I'll kind of give you a comparison example from Wednesday of how slightly different factors may change the way how you approach the day. So this, I see the development. There's a signature there, but my conviction to actually put on risk is really not high enough to do that. So I'd rather just let it play through. If it gives me my more conservative plan, which would have been a breakout of this high, which it didn't end up doing, then great, I would take that as a trade. But it didn't offer that, so I don't have a trade. And that's okay, because we come into the next day where I'm thinking, okay, now we look back at the daily. What did it do? Both pairs. Monday, Tuesday expansion. ES, Tuesday expansion. We have a relevant swing that's still above in the market on both pairs. So we can have a third day of expansion, knowing the expansion rule. So we're looking for another continuation. There would be no reason not to assume that. We need to see price draw up into the opposing relevant swing, and we have that agreement on both pairs. If we were to note out an invalidation point, ES and NQ, you would use 50% of that previous day range. And we put this in the analysis. I think the only other thing that I mentioned with this is I'm going to look to the upside, get into that opposing relevant swing, but main thing you're going to want to focus on is because really with mainly ES, because this next day is going to open right on that opposing relevant swing. We know true reversals can form here. So as long as I don't open my charts on Wednesday and I see ES engaging this high and developing a bearish daily profile here, then I'm going to assume continuation up into this. I just want to be aware of the potential of the opposing side of the market developing. It's just all about the awareness of that happening, but I'm still going to go into this saying I'd like to see that bullish daily profile development so I can take a long, trading that continuation up into the high. So we have the framework, manipulation of a daily relevant low, Monday confirmation, Tuesday's another layer of confirmation, and because of the expansion rule, we could trade 3 days of continuation up into an opposing relevant high. And we get into the daily profile. And very similar to the previous day, we have the 18 candle making a shallow opposing run, not establishing a low. The 1 o'clock candle coming in, running out that low, and closing back up into the range. This is where we can start to look at the New York session and say we should be seeing a continuation away from that low. And the difference is the development when we start to look at the lower time frames on this, we have a more classic development where it's not something like this, where that initial reversal is going to be propped up quite high. The difference here is we have that sustained opposing run, and now our initial reversal can be set quite low. So we can participate a bit lower or earlier in that daily candle to capture the expansion versus previously, almost for myself, wanting to wait a bit higher, which is less ideal. So when we see that initial reversal take place, we have a divergence off the intraday low. If we were to look at ES, lower low, and Q higher low. So we take this from that low of day, initial reversal, and then obviously again we're in respect to our invalidation point. It's another thing to mention. So first initial reversal, not entering on that, that's a layer of confirmation, and then we have our first opposing candle, higher time frame because this is prior to the open, prior to any volatility drivers, so we can get away with higher time frames to clear out that noise. First closure through an opposing candle in the continuation. That there was my initial entry on this trade because we have basically everything we need in terms of the daily profile. This is an ideal development. Trading off that low, very clear signature, first opposing candle, higher time frame, and I'm taking that as an entry to position into the open where we still have some time, another hour before we get there. And as this was playing out, and also pre-market, I'm usually going to default to NQ. It's the pair I'll take. We ended up getting an opportunity to take another stab at this at the open, more so just waiting for an additional confirmation at the open. We got a closure through these opposing candles. Right prior to it, the open is supporting that idea. And I added slightly more to this position because I didn't have a entire position on that initial entry. Adding more at open with additional confluence for this to play out, adding a bit more, keeping my stop, and then I'm pyramided into that position to see price go up into at least that intraday high, ideally up here. But when you get these pre-open entries, your risk to reward gets kind of squeezed in a sense that you can enter when the volatility is relatively lower, so your stop may not be as significant. And then once the high volatility period comes in, it's already somewhat broken away from your entry, and that point range that you were working with is quite extended when the volatility hits the market. So I'm already up 2R when we hit that intraday high. So I scaled one and another, and the way that this got up to our objective, I know Kiko put on a show with his trade management that I did not do, and he got his trade up into that high. So it's just the sense in the way that it gets there, bit choppy. I know some people even took this continuation. I don't know if there was a 15-minute. That was a 5-minute. I know some even took that following up, and just like an unfortunate way that it developed. If you had your stop here, you're getting stopped out, and then it makes its final push into the close of the day through that opposing objective, which is that daily relevant high that we'd be looking at. And again, this is why we note these things out in my plan, because we can see where is the reaction taking place. We capture the initial expansion to the high, but then once we reach there, price is starting to turn because we know reversals can occur here. So we can't just discount that when planning in the previous day. So that's super important. That's why it's a target. That's also why it's part of the plan. We know price could reverse here, so we have to be aware of that. Give more examples of how to utilize the 7-hour to define the daily profiles. I'm new to the idea. I often use 4-hour, but sometimes the ideal swing setup is just too late. Therefore, I enter with late entry, less ideal, risk to reward. So the 7-hour is basically just capturing the sessions. And when you realize what it's doing, it's really quite simple. The most easy way to go about this is not trading in the 18 or the 1 o'clock candle, because the real goal is you're trying to get this context so that by the time you get to 8 o'clock, there's very few things that the market can actually do to offer a trade. Usually it's simplified down to one of the profiles. And at that point, it does it and you trade, or it doesn't and you don't. So the one rule, or really the main one, is going to be, in any circumstance, don't trade within this 18 candle. And as long as you're trading higher, if that 18 candle is a low, then we do not trade the continuation. So I'm going to show a couple of reasons why. So we're bullish on this day. This is Tuesday. You're trying to trade the upside. You're not trading within the 18 candle. That's the Asia session. This is not just like a randomized thing. The reason 18 candle, for a few reasons, is we don't have context in the daily candle yet. So we're still allowing that to build. The 18 candle is very slow. It's the Asia session. Not much is happening. So it's in our best interest in the majority of days to not try to participate in here and just use this as context. And if we are looking bullish and that 18 candle is holding a low of day, we can see this divider here for the new day. This is the current low of day. So if we're looking to trade the upside, as long as that 18 candle holds the low, we're not going to trade within the 1 o'clock candle. And what is the reason behind that? Because this is where we're still trying to decide the daily profile, and any of the three could still be in play. So that 1 o'clock candle, it could do plenty of things. It could consolidate. It could stay inside this range. And if you try to position early, well, then it's not going to play out, because now we have failure swings to that low. If we see this, then we know, okay, there's failure swings to the low. We're trading an 8 o'clock candle reversal. That 1 o'clock candle could expand higher and break away from that low. Okay, now we know we're in an 18 candle reversal. We don't need to return here. And that 8 o'clock candle is just a continuation. We could also see, just like what we did get, it looks like it's breaking away from the low, but actually that 1 o'clock candle is coming back down into that low and trades back up into the range. Now we're in a London reversal. So you still have every single scenario in play. That's why, as long as this holds the low, we need context here. And then once this plays out, if we are trading in a London reversal, that's a situation where we can trade inside of the London session. So we have this establishing the low. We know that's the profile. It's trading back up into the range. And that's where we see this development. Okay, now we know what daily profile we're in. We're just looking for trading away from this low, continuations during the New York session, and it should respect that low, and we have continuation. But you can see that play out in a bunch of different ways. It's just like this Monday, 18 candles holding a low. We see the 1 o'clock candle break away. We're not going back here. You just trade the continuation. So it's those situations and the reason behind waiting sometimes when it becomes actionable, and understanding that the New York session is going to be always the easiest and majority of the time, because this profile only plays out 20% of the time. You're likely going to be waiting until after 8 o'clock anyways. So sure, there's going to be situations you trade that London candle positioning into New York, but most situations lead you down to the New York session if you're not already making that a strict rule. So that's kind of the general breakdown of just the reason behind each step. So I promise it's not just a random thing I drew up. So that's the daily profile. And with that reaction on Wednesday, going into Thursday, we are again readjusting bias, because every single day you are catching up with bias. It's not a weekly thing. I'm not predicting the entire week on Monday or Sunday. Every single day is new context. So when we looked at this, again, I'm going first instinct, that last reaction of a relevant swing. What did we have? This was our relevant high. Previously a target, now part of our framework. We had a price drawing into it, closing back down into the range on both pairs. That is showing a manipulation of a high. And if the previous day manipulated a relevant swing, then the next day I want to continue away from that. We have validation points. And we are looking for that next day to first confirm bearish daily profile if we are going to trade away from that high. And this is a day, I think we had this recorded in the library. So I was just live streaming this morning. So you probably already got the gist of what we were looking at, but this is another example of the daily profile, just a slightly different development. When we are leaning bearish, we want to fully entertain that idea first. That 18 candle put in a high. So we are not trading in this session here. And when I see this type of development where it's not really fully falling under one of the perfect bearish daily profiles, I'm not going to immediately just trade this higher because the daily profile looks like this. It still has potential to trade lower, and my daily framework is going to outweigh that. And we could still see something like this where we run out that high, that 18 candle remains, and we're trading in the New York session. As long as this is not creating a failure swing to the intraday high, we can trade this profile. And because of the daily profile not being perfect development and the daily framework still being valid, I'm just going to wait for more context. I want to be sure on this, and this is where we went into lower time frames. And I said, we're bearish on this day. We want to see this go lower because of the daily. We have the open coming through. Really what we're going to want to see is we're running out this high, and it should be turning here if we're going to get confirmation. And this would be our closure to start saying we are looking for price to trade lower. We could start thinking about executing to the downside. And you kind of have to get into the weed of the details here for this one. But NQ, it's probably going to be better to watch the recording anyways. NQ is weaker at open just because YM was extremely strong. So that's going to give you weakness in NQ. This kind of just breaks down immediately. And if we were to get another continuation here, we're wanting to see ES get in alignment with this move, and it was just very messy. It started leaving these failure swings. And by the time we cleared them out in any sense, there was no opportunity left here. So strength in ES being that middle pair, NQ very weak, YM very strong. It left this very messy framework and nothing that would have allowed for an entry. But you can see how the move plays out in what we're looking for, but to actually get a solid entry on that, not something. And mainly due to how ES was trading here, this was quite a mess for the day. What we would have wanted to see is mainly even if we got this right at open, if we got this closure, which we did, this was a first good sign. So it was looking good initially. If this next candle didn't make this deep run back in, if we stayed shallow to that and got a signature on both ES and NQ, that would have been actionable to take to the downside. But that deep run starts leaving these failure swings. You're not respecting this closure. It's no longer in agreement with how NQ is trading. So that was the walkthrough of that day. It didn't end up giving anything, but you understand why we're looking to the downside on Thursday. And then this is where we get into NFP, where it's Friday. We want to know that news event is there. So NFP 8:30 pretty much entirely sets the tone for the day, just because of the volatility. We can go into it with framework. We want to know what the daily looks like, but there's really not too much to get into on this one. NFP trades through, and you just start getting these extremely deep runs in both directions. ES, NQ. And it leaves you with, you can't really do anything when this happens, especially when you get later into the day. Deep run back into this high, trades away. You leave a failure swing here. Deep run into the low, leaves a failure swing here. And it just starts trading back and forth. And it's just not a development that is one even going to provide an entry, just because even with this, you know, let's say it gets a closure, these extremely deep runs are going to leave you with a very wide stop. Even if this, we go deep back into this high, if we caught this closure down below, you're working with an extremely wide stop. And this goes for both pairs. We didn't have any divergences in the market to trade away from any of these highs or lows. They were both making deep runs without taking either side. So that open paired with how NFP traded, it didn't really leave you with anything. So this day, even this later continuation, these opposing candles, which are extremely wide, it's not really going to leave you with anything that you can work with. So the daily also not very good off the lows. So pretty quickly call that day off. Really not much to comment on when you get the news like that. But it's always going to be one of those things that the news and the open paired together, that volatility is going to tell you what to do on a day like that. And you'll know usually pretty quickly. There's no need to hang around if the development isn't there. So that's kind of how this ended up being for the day. I mean, one thing, so I'll say what I was open to trading because I'm going off how it's going here with the news. So the question is where would you even enter even if you wanted to? So I could have been open to trading this to the downside because it's kind of tough to see here, but I believe at the moment we had a divergence off of previous day high, which is valid framework off of that previous day high, and the open was trading lower. Let's say you get to your lowest time frame, the 5 minute here, you don't even get a closure. And even if you were to call this something valid, which you really can't because we have failure swings on the highs, even if this got a closure, you have to really ask yourself if you're going to take a 140 point stop. There's just, even if you're drilled down on the lower time frames, I wouldn't even see where you would find an entry. So in the sense of like tracking this in a live market, there wouldn't even really be anything to jump on. There would be certain times, like I could explain the different layers of the dailies doing this, the daily profile, certain rules, but in this is in the sense that if you were only on the 5 minute, I still would not see anywhere that you would be able to take an entry that would really make sense. And that might be a show of how poor the development was on the lower time frames that open. This take out the low. So like this was the only real first closure you got. Again, you run into that same issue. Same with this one. You're late in the day. It's like, could you take that entry? I don't know. This would have been your first continuation signature, so you would have needed a 280-ish point move to even reach 2R. Failure swings at the lows. It's just really not there. See a couple of people typing, so I'm assuming more questions on this previous week. Which time frames, intermediate, lower time frames you look at for entries? M15-1. So my approach is slightly different from Fractal in that alignment. So you just said it expands, leaving no time for entry, especially close to 8:30 or 9:30. Yeah, that's something. So the way that I do it is based on the daily profile and based on session. So if we're trading in the London session, there's a case I'm going to position here. I'm going to focus on the 15-minute and 30-minute for signatures. And reason being, the London session is generally slower. It's not as volatile. And higher time frame signatures are going to actually exist there. But also when you get to a lower time frame alignment, lower than 15, you end up seeing more noise. And that doesn't help you out. So that time frame alignment makes sense for London session. When you get into New York session, my time frames are 15-minute to 5-minute. And then when we get beyond that, usually when you get post open, like amazing if you get a 50-minute signature, but it is less common because if you're trading an expansion day around 9:30, usually it's going to happen quite fast. So that's where 5-minute comes in. And even beyond 5-minute, I have refinement time frames. So let's say the 5-minute has a certain signature. So I think maybe Tuesday is an okay example. I didn't trade Tuesday, but kind of remember what I saw here. Like something like this could be a decent example. Again, I don't know what this looks like, but if you were to see a 5-minute signature, so this is post open, that is not as defined. You see it's there and it has potential. You could always refine to the 4 and 3-minute to just get a better perspective on that signature. So here, 4-minute, you get wider candle bodies, which we like to see. 3-minute, and this is what we're looking for. So 3-minute gives you very defined candle bodies throughout the signature. You get a clear closure, but also one that is close to that opening price that you draw out. So when you take an entry on the open of that next candle, you're not extended from where your stop loss is. Versus that 4-minute main issue here doesn't look as defined, but also once you get that closure, you're very much extended from your stop. And the 5-minute is okay in that sense, but this signature is not as defined. You have a small candle body. So that would be reason for refinement time frames, saying it's there on the 5-minute. I see it developing, but maybe I can get a better perspective on this, on the signature, a better closure. And that's where this would come in. So I don't drop below 3-minute, but that's how it works for the alignment. And I'm always going to go top to bottom. So I'm not going to be in the New York session and start on the 3-minute. I'm saying, is there a 15-minute here? Okay, clearly it's not, unless I'm going to position on this pre-open or if they got a closure there. But 50-minute, there's no development here. Okay, I need to be on a 5-minute. That looks like it has potential. Let me start refining time frames. And then only now do I end up this low. Same goes with London session. You could even find an hourly signature sometimes. Pretty rare, but 30-minute, 15-minute, I would go top to bottom. Explain about strength between assets. Which scenario will one try to catch up with the others? I only look at, so I'll look between ES, NQ, and YM. I'll only bring in YM really at the open, just because that's that moment where it really starts to change strength and weakness. So like we have this here, I think this was from Thursday. If we look to this day, like for example here we have YM that is showing weakness in that pre-market session in comparison to ES and NQ. And then suddenly right at 9:30 from the weakest pair to the strongest, it's just the 9:30 open is where you'll start to see this effect. And I really only look at YM to know why is NQ trading like this and why is ES trading like this, because I'm going to get framework, daily profile, and pretty much everything from ES and NQ where I want to execute. But right at the open, I want to look at YM and see how it's trading, because that's just going to give me context as to, okay, YM is very strong. That's why ES is weak. That's why ES is in the middle and NQ is very weak. When it comes to like if you want to trade YM, the only time I'd really do that is if it's like independently had its own setup, which it does at times. Like this past week, it had a good upside framework that we talked about, and it got really nice delivery off of that relevant low on the previous week closure. Much more clear than ES and NQ. The daily is always going to look different on YM, and it has independently a good framework to look at continuations on these following days. And you could do that on its own, just looking at YM and wanting to trade daily profile up into opposing relevant highs. So that's something you can do. But when I'm trading ES and NQ, I just flip it on there right at the open. I don't really deeply take it into account a lot of the times. Sometimes it can be helpful. Let's say I am bearish and you see YM is very strong, and maybe that's holding up one of the pairs. If YM trades up into a relevant high and starts to manipulate it and trade lower, if the strongest pair is turning, then the weaker pairs are likely to follow through more. So that's something I can think about as well. But it's always going to be really based in like what my bias is, and I'll bring YM in just to kind of understand how ES and NQ are trading. Explain a divergence. When one closes through, the other fails to close. December 31st, January 2nd. What time frame are we thinking of here? Is this daily or more of like an entry time frame? Daily. Okay, so if it doesn't close through, so you're saying December 31st, January 2nd. ES closed back up into the range, NQ closed through. Okay, yeah, with the daily. So I think you're talking about like the wick here. I thought you were talking about opposing candles for a second. I assume you're talking about this. So this is where, this was the close of the week. So we have this being Friday, and we see that ES has a better framework. This is why, I mean, in this case, I don't trade Monday, so Monday is going to be context for me. And I went into this, when I was looking at this on Sunday, I wasn't heavily convicted on a direction because we had both of these frameworks as potential, and Monday basically sets the side of the market that I should be looking at. And when I see Monday put in a low in respect to this here and expand away, then my assumption is going to be, let me follow this framework. And I know NQ isn't perfect, but it still has that wick. And even if I marked it out, we know that this next day is respecting it. So there's no failure swings here that I'm concerned about. And when Monday expands away, I can lean into that as a direction. So that's something you can do. Anytime you feel like there is something that's conflicting, then you can just wait for more context. I guess in this situation, just naturally in my process, that's just how it kind of works out. But seeing this, this to me doesn't really hold that much weight. And we're still in that position. The two frameworks were the divergence off the high. And you get kind of this neutral close in a sense, where you have potential manipulation of the low, but also potentially trading to the downside. And Monday negates the downside, expands away from the low. And that's why I would favor the upside. So you don't always have to know in that moment. There's always more context coming. Yeah, right now I would just lean towards calling this consolidation. It's not really very well defined off the lows where it's trading from, and it's right up on this high. So you can basically just call this a range. This here. And making an assumption that we're not that far off from this high. I mean, sure, the market could turn here. That wouldn't be very helpful. I'd rather just pretty much wait to see it get up into this high and see what it does there. And we can basically be open since it's a range and ranges are neutral from this low to this high. Then we can trade manipulation of this and continuations. We could trade a breakout of this high. You're pretty much open to options because it's two relevant swings. And the lows, I know there's a divergence here, but I still don't find these lows that interesting. Is like I need to trade away from this right away. I'd rather just watch the reaction of this high, which I'm going to more or less assume that price should reach up into there at some point soon. Just knowing it's right up on it. It's really that's my only reasoning to say that it's right there. Let's want to see this get up into that high, so the development can just be the plan going forward. Because these lows here are reflective of failure swings. Can pull up the economic calendar for this week because we do have CPI tomorrow. So CPI on a Tuesday, that is this week. Tomorrow, high impact news. So just like NFP, the only one that really is going to matter is 8:30 on Tuesday, which is tomorrow, and that's high impact news. So no trading before intraday and no holding open trades through CPI because of the volatility. And I think Wednesday PPI retail sales, this one has some variability, so this could hit the market decently, but still these two are considered low impact, Wednesday and Thursday at 8:30. So no rules around them, but I definitely, this one especially, I like to know that they're there because added volatility is always helpful in context and confluence. So that's important. But CPI tomorrow, definitely know that that is going on. YM has good expansions. Struggle is analysis paralysis when looking at both. What do you recommend? I mean, yeah, it'll make good moves for sure. I mean, I feel like it's not like wildly different than ESNQ from like having good moves from that perspective. But if it's not helping you, then for now I would take it out because even for myself, it's not weighed that heavily and it's not that much of a concern. I would, anytime you're thinking about adding something or like including an additional thing, your first instinct in your actual trading is not let me start applying this right now. It should be first instinct is damage control, meaning I'm not just going to add things that I don't know are going to help me yet. Let me trade how I know I should be trading. And on the side, when the day is over and the market's closed, let me review and learn to see, oh, okay, YM did this alongside ESNQ. I've been doing this for a couple weeks now. I see this repeating multiple times. And I think in this next live market, because I've had that experience, I'm going to try to apply that. Oh, I've seen this in my last few weeks of reviewing the market. This should happen going forward. Then you start to integrate it slowly. But anytime in your actual trading, there'd be no reason to just keep adding things, especially if you know it's adding confusion. So keep your trading normal, knowing what works, what keeps things clear. Review on the side, outside of active hours, learn, and then slowly in the future you can integrate. Or through your process, you might learn, oh wait, it's actually not necessary at all. I don't need to add this. So that's how I'd really approach literally adding anything. When there's a 4-hour fair value gap inside, there is a 1-hour swing low and price only tags a fair value gap. It doesn't sweep the swing low. You trust trading away. Let's see. 1-hour swing low. It's a gap. doesn't sweep the swing low. So hourly highs and lows, I don't weigh that heavily. So unless, like, this is where the context would come in, unless that 1 hour swing low you had noted out was an intraday low. So like, if I don't know if I can copy this, it's too well. I can screenshot this, paste it in here. If this 1 hour low, if I had like a divider here, it's kind of tough to. Okay, like kind of like that. If this to the left of that divider was a previous day, and to the right of that was a new day, so the opening came down, created a low, and we start to form failure swings there. If it was an intraday low, then I would say, okay, there's failure swings to the intraday low. I am not interested in trading that higher unless we got some breakout. Or I would be checking the other pair to see if there was a divergence off the low. But if this was like this, and the left was a previous day and the right's a new day, I'd probably let it pass. I don't really care about it as much. It's more about inside of a current day or not, because just random hourly swings, unless it was showing on the daily, it doesn't really matter to me that much. As much. Intraday, like I just showed there, then I would very much care about that. If I'm trading your model, I'm liking it. Would you study Fractal GXT, help me improve, or would it just make my mind mess having too many things on your mind? I guess it's kind of a similar thing to what I just mentioned. It's tough for me to say because from my perspective, I only know what I know. And it's like my system is, when I tell you that's all I know, I don't know anything else. So I couldn't say like, oh, this is going to help you or not, because I'm always going to stick with what I know. But I have seen plenty of people combine certain parts and do well with it. I think it just has to be, you kind of have to do it with some level of intention. And it's also going to be a lot of information to like overlap. You almost have to like take it upon yourself to say, I'm going to apply this here and that there, remove this. So it's not to say that it's maybe the easiest task ever, but I have seen it done, and there's plenty of people that, trade well doing some level of a mix between the two. So I think I'm trying to think of, let's see. It kind of depends what you want to do, but I know people who are doing that. Yes, I mean, you won't go wrong sticking with one, just because all of them are, complete in their own sense. So it's, yeah. Yeah, you take parts of it, and like there's certain ones that mesh very easily, like T's daily approach is very much in a sense transferable to what I'm doing. But then you get into like entries, and the rules start to vary a bit more. you're for sure going to find overlap in certain areas. ES. ES will be this high. Keep that in mind. Can you show what you do before a new week starts? I know you look at the calendar to choose trading days. I'm not too sure about how you get your top-down analysis to use weekly or monthly to define bias for the week. Just purely look at the closest price action on the daily for bias. So yeah, economic calendar, kind of like you see me doing, is mostly for identifying just high-impact news days. Just because I don't want to go into a day unaware of that specifically, because that's can be just like a detrimental mistake for absolutely no reason. You know, you're in the market and suddenly it just implodes to one side. So that's usually not a good situation to be in. So that's like baseline stuff. And then when it comes to the actual charts, I don't go above the daily. The weekly, you know, sometimes there can be reason to look, but I don't find it on pretty much any time, and I don't even look at it. So weekly, monthly, I'm not setting a bias there. And reason being, something I always say, if we're using higher time frames, like even if you go out to the monthly and I have a monthly bias for a trade that I'm only going to hold for a couple hours, you know, if you're wrong on that, then you know you're going to trade with an incorrect or different bias for an entire month. And then also, even in a directional month, you're going to have days that trade in the opposing direction, or maybe an entire week that goes in the other direction. So it's not really beneficial. So strictly keeping to the daily, and it's kind of like a one day at a time thing. So this week I'm identifying points in the market that I know are going to matter. And I mean, maybe it doesn't reach as high, it would slightly be unfortunate, but assuming it's going to pop up into this high, this is really the only line I need on my chart, because we have this range established, and that reaction there would set my bias for Tuesday or my plan for Tuesday. And things change as well. So like last week, because I do go day by day and bias can change, we had Monday confirm upside, Tuesday traded the continuation, Wednesday on NQ traded the continuation up into this high. And once we reached this opposing objective, we had that continuation bias because there was no reason not to hold that until we reach this high. Now we have a relevant swing that we manipulated. Okay, I'm not going to just start consuming continuation again, because previous day had this reaction. Now I want to see downside. So the bias can shift, it can change, it can fall through to a certain point. We hit an objective. Now you readjust. So economic calendar is like an overview. So every day I know what's happening. Going into the week, it's really like what does Monday do? What does that mean about Tuesday? And I could be trading a different bias by Wednesday or Thursday. So it's always looking at the context for the week. Monday tells you about Tuesday. Monday and Tuesday tells you about Wednesday. Monday, Tuesday, Wednesday tells you about Thursday. And that continues on. I don't trade Forex or metals other than not going below 15-minute. The model's the same. I think you could, I don't know, certain ones maybe, maybe not. Whenever I traded Euro, never went below 15-minute. It just doesn't have a volatility driver, so it's just like, do I need to drop down to a 5-minute? Usually not. Otherwise, yeah, it doesn't change. You don't have a 9:30 open, so slightly changes as well, but what you're actually looking for is the same. New monitor or monitors. Thought you got two. To use the weekly profile for framing daily bias, for example, midweek reversal as confluence. Yeah, it's there. So it's more or less integrated into relevant swings and using the expansion rule. So it's good to see the weekly development in a certain way. So like if you see a Wednesday reversal, it's kind of like this in the sense that it's a Wednesday reversal, but we don't fully need to know that because we're using relevant swings, and we can kind of get alignment of the weekly profile naturally by following that process. And when we also know the expansion rule, so 3 days of expansion within a week, once we have that, we stop trading the continuation. That's also weekly profile stuff. So if you look at any weekly profile, none of them have more than 3 consecutive days of expansion within the week. So that plays into it. If we did see that, like for example, if we expanded on Wednesday here through this high, I wouldn't trade Thursday as another continuation higher. So we'd be in a Thursday counter profile, but you didn't really need to know that to trade it because you understand the expansion rule, but we would have just been trading the weekly profile without really realizing it. Expansion rule, relevant swing, traded back into the range. So it's there, but it's probably just talked about slightly differently than explicitly saying the weekly profile. Yep. All right, so I'll keep that marked out so you guys know up into that high. And also I'm going to just leave an analysis post if we do get a reaction there for what to see into tomorrow, but also CPI. Like if it doesn't get an immediate reaction, then CPI high impact news will basically set the tone. How I approach the days. So, it's going to be dependent on the day itself. Some days I know I'm going into it with a certain bias. Some days I can look at the chart and immediately there's nothing there. So it kind of depends on that plan from the previous day, because I usually know what I'm looking for, and it's either there or it's not. So there's that element to it. But then, if I see an opportunity, then I'm going to go daily. It's just my model. I don't really have like a specific routine. I always check my phone first when I wake up, especially if I'm expecting an opportunity. But once I'm at my charts, it's basically just looking for the model. And if there's potential, if the daily is already in a framework, well, then now I'm on the daily profile. the daily profile has alignment, well, now I'm on the lower time frames looking for the open. So it's kind of just more about being aware of how the market's positioned and do I need to entertain this? And if I do, then I sit there and I wait until it's either offered or the day's over. And once that's done, once my day's called off, whether I close a trade or I know there's nothing left, then I open my charts, once the market's closed, to start creating my plan for the next day. The actual approach is, just going to be top down, just like the steps. But yeah, I think I'm going to close it off here. A lot of great questions. Again, these two levels are really all I'm going to look at. I call it two, but it's really just as high. CPI tomorrow, so again, that'll set more of the tone as well in terms of the development. And I'm not going to send out analysis tonight because of CPI unless we get a really significant reaction, but more or less it's going to be looking at it tomorrow morning. So that's the plan, and I hope you all have a nice rest of your day, and we'll get this uploaded pretty soon, and we'll see you guys tomorrow.